Welcome, ladies and gentlemen, to the Precious Metal Summit Conference, day one in Zurich. It's November, it's 11th November 2024, and I'm really happy I have my first guest here this morning, Abitibi Metals, I think even for the first time at Commodity TV, and Jon Deluce is here with us, the CEO. Good morning, Jon, how are you?
Good morning, I'm great. Thanks for having me.
Thank you very much for taking the time. I must say, really interesting company. When I started my presentation, we talk about copper in Quebec, but also associated with gold and silver. Yeah. Can you give us just a short overview, please?
Yeah, so I'm the CEO and founder of Abitibi. Our primary listing is AMQ on the CSE. So a very exciting story. We announced what is a company-making acquisition in November of last year. So we're at our first year anniversary mark. So we're developing the B26 polymetallic deposit, which is very unique because this is 11.4 million ton resource at just under 3% copper equivalent. That since until we optioned it was developed by the Quebec government. So this has never been in a public company. So a very significant asset, about $25 million put into it, invested by the government. So we're starting with a great starting point. And over the last year, we raised $22 million, largely internally, with Frank Justra, Greg Shimandi, amongst my family office that's continued and are the largest shareholders at 30%. So fully funded to Q1 of 2026. So we're in a great position in what is a very strong copper and commodity market that I think is at the very beginning.
Okay, super. Yeah, I'm absolutely also bullish for copper, for silver, for gold. That's no doubt. Yeah, you are on the right metals, I would say. Definitely. So let's start with B26 because I was quite impressed when I read through it. I think I saw 2018, you had 115,000 meters drilled already from the government, which is great. So this is a lot of money which you do not have to bring up. So what was the most important development for you this year for B26?
So as I mentioned, we raised a lot of capital since optioning the project, and we've taken a 7-year obligation with the government. We financed it in 5 months. So we will complete our option to earn 80% by the end of next year. We optioned the project. We got into 13,500 meters of drilling right away in the first half of the year. Drilled great results, up to 11.4% copper equivalent over 10.6 meters. That had an excellent gold credit. So although it's a copper-focused project, it does have a strong gold credit, which is a very sought-after deposit type, especially in this environment. Even base metal, or even traditionally gold metal producers are saying the most valuable and sought-after deposit in the world right now is gold and copper, especially in jurisdictions like Quebec, given that 50% of annual copper production worldwide is from areas of political instability. So this is a factor that's going to become more and more important. We're back drilling with phase 2. 16,500 meters between now and Christmas. 2 drills on site, testing the mid-level, the western plunge, where we really see this being a 30 to 50 million ton deposit target size. So very excited about that. We are very close to bringing out an updated resource estimate to update.
That's already 43-101.
It is from 2018 between SOCOM, the Quebec government company, and SGS. We're updating that resource to take into consideration our drilling in the first half of the year, the change in commodity prices, given that the 2018 resource was done at half of today's commodity prices. So lots of catalysts on the horizon, and we're very short to bringing out our initial results from the phase 2 drill program.
Yeah, that's amazing. I mean, those are all facts which, to my understanding, are not justifying your low market cap. I think it should be much higher. Why do you think it's still undervalued?
It's a great question. I think part of it is we were the top performing junior mining company in the Canadian markets for 2023. So on a year-over-year basis, we've grown from a 5 million market cap up to 45 million.
That's nice.
And we were a lot higher and earlier in the year, about 65 million. But at the end of the day, people are asking, in this junior mining market where there's 15% of companies that are, in my opinion, investable, really strong investment cases, people want to make sure that we're not a one-off. We've had very high liquidity. We've been a target of profit taking over the summer. We made the decision to pause drilling over the summer to get the modeling done and the hard work to build up our phase 2 targets and resource. So I think we've at a pause. We started to trade better ahead of resource and results, but I think that we're going to be able to prove over the next 6 months that it's not a one-off, that this is a large-scale deposit that is truly open because it was developed by the government and not a major or junior that would have never sold this unless they had drilled it off. So really, this is a unique opportunity. Our competitors are trading at huge premiums to where we are today, but it's about proving ourselves, continue to deliver with our credibility and what we've outlaid to the market. And I think we'll be able to build up that valuation gap.
Okay, super. Would it be possible to start with an open pit and then go underground? Because it looked a little bit to me in your presentation that this might be an option to do it like that.
Yeah, that's a great question. So that was one of the theses that we saw when we optioned this project. So 2018 resource was high grade underground, but outside of the massive sulfide core that is very high grade, there is a disseminated wider lens. That is something that we drilled. In the first half of the year, we drilled about 1.5% copper over 100 meters to push out that bedrock interface to the north. So we do see a strong open pit thesis. We need to do more work to be able to best outline that pit shell, but it is definitely provides a lot of optionality on the deposit.
Okay, super. Then I saw you have a second project, B26.
That's correct.
Okay, please give us also an insight into that.
So B26 is how we were in the camp, and we knew that B26 was available. It's 7 kilometers away. It's on the same contact as B26, but it's a gold-focused system as of today. There is some copper indicators in the system, but it shows the strength of this overall system within the South Bay camp. And I should note, so both of these projects are within 7 kilometers of the historical South Bay mine, which produced 53 million tons of similar polymetallic material over 20 years. So that's a reason why the Quebec government with Billiton made these discoveries. So they discovered both the B26 and B26 projects. But B26, we drilled up to 56 grams per ton over 5.5 meters of gold. Very strong high-grade results. Less drilling, about 35,000 meters of drilling, but certainly will be part of a central PEA when we build the PEA around both projects.
Okay, super. That would be my next question. So could you maybe connect both projects? Because that would be wonderful.
Yeah, exactly. That will help with the overall economics. Certainly having higher grade gold mixed in with the polymetallic material, we think that will have a positive impact. And also when the majors, like our goal is we develop this for a major to take over and develop these 2 deposits. And having the optionality of having multiple deposits on trend helps increase that value proposition. So it is helpful. And also B26, we have only explored a 1.6 kilometer of a 8.3 kilometer trend. So there's a lot more project-wide exploration that needs to be done because we do think there is potential for more discovery along that trend.
Okay, super. So to me, it sounds a bit like 2025 is then the preparation maybe for a PEA 2026?
Yeah, PEA in the first quarter of 2026. It's our final deliverable to earn the option from the Quebec government SOCOM. So it's on the horizon. But I think really we see a lot of exploration upside before we need to start thinking PEA because the B26 system is open. We've announced visuals on our deeper holes that have extended the system about 200 meters. We're doing deep focused geophysics to help look at the larger scale extensions of the system. So I think although PEA is on the horizon, I don't want to mix the messaging on that the system is capped. So really there's a lot of upside in exploration, and I think we're going to be able to cover a lot of ground between now and 2026 because again, we're fully funded to drill another 20,000 meters next year in addition to the 16.5 that's currently underway. But we're in a great position to scale up if that opportunity comes.
Yeah, exactly. Fully funded. This is what we love as investors to hear.
Exactly.
So you are done until the PEA, right, with the funding?
Yes.
Wow, that's important.
So we got ahead of it.
Super.
We raised all the capital we raised, no warrants. So there's no overhang on the stock. Very unique position in what is still an overall tough junior mining market, although I think the tides are turning. We see the U.S. Fed is cut. Gold is performing well. A lot of volatility in the overall markets. I do think our case is very strong in the junior mining market and commodity space. So I think we're well positioned to capitalize on what is going to be a good rotation in the markets.
Absolutely. No, I think that too. And I think one more thing is really going into favor for you because copper is moving into a deficit. So that price might move over the next 2-3 years also.
Oh, exactly. Like the deficit projections by 2030 are significant. And also, even more importantly, is where the copper is going to be coming from.
Correct.
Because we saw in Panama the nationalization, there's good examples of you can't even just count on the copper mines that are there today because it will be viewed as a strategic metal with the amount of deficits that are projected. Having supply from a place like Quebec, which is one of the best jurisdictions in the world, is going to be a sought after premium. And we see that in there's not a lot of polymetallic VMSs in Canada, but the few that are there are valued at a premium. So that's why we're excited to be within that market.
Exactly. And you have with the US, one of the largest copper markets in the world in front of your door.
Exactly.
So that is super. Great. Jon, thank you very much. It was a great interview. Really, I have to check out your company and your stock because I really should invest. I like it.
Oh, I appreciate that. Thanks for having me.
Thank you very much. Yeah, ladies and gentlemen, there was Jon Deluce, the CEO of Abitibi Metals. You heard it. Copper in the forefront, but also gold, silver, some zinc is really here connected with the company. And yeah, they are working on a resource update, but also they are working on a PEA for the first quarter 2026. That's only a good year and 3 months from here approximately, which is really short term. But don't forget, the company is financed. This is super important. No warrants outstanding, and they are in the right metals. So really check out that company because it has only a market cap by now by $45 million, $50 million maybe today, a little bit higher. But I must say, this is really cheap. Check out the company. Thanks for watching us, and bye-bye from Zurich.